a system that just ain't right. Gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by the rules I want.
Welcome. I am Matt. This is the Anarchist Investor. Oh man, I missed the intro, and here we go. This is the Anarchist Investor Alive, coming at you every Monday through Friday at 12 Eastern. Happy Friday, everyone. Talking about contrarian investments, markets, the economy, how to protect and grow your money without it getting stolen by some dirty banksters. Today on the show, we are talking about the apes, the GameStop apes. Here's the deal. We're going to kind of like postmortem this. And this is something where I am rooting for the same people that I think are probably going to lose a lot of money. And it's unfortunate because the focus of this show is on helping people, protect and grow their net worth by not necessarily falling into the same, pre-programmed propaganda that we've been fed most of our lives about, just passive investing and dollar cost average into the stock market and buy S&P index funds and, do that for your whole life. And then when you retire, things will be all right. Just don't retire in 2008 or in 2001 or right. Like no one talks about timing or anything like that. But beyond that, I'm in favor of, people that prey on others getting their comeuppance. Unfortunately, the reason why a lot of these people are able to prey on others is because they run the game, right? They are the ones that set the rules. And even if you learn how to game the rules, they will just readjust. They'll just reset the rules. They'll just change them. They will break them whenever they need to, when it's in their best interest. And that's what we see playing out here. In fact, I don't even know if I would necessarily say they're breaking the rules in this very moment. They definitely did when they shut down retail traders' ability to, buy and sell GameStop back when the first ramp happened with this. But what I see happening right now is like, this is a revisiting of this story, and there's a resurgence of this desire to make sure that the hedge funds actually feel the pain. And unfortunately, there's been a big piece of this that's been missed by most people that are involved in it. Okay. And the people on Wall Street understand this because, again, they built it this way. They made the game this way. All right. So forgive me if you already kind of know some of this stuff. I'm going to do a little bit of a backstory here. Okay. And I'm going to try and piece this together for anyone who's unfamiliar with what the hell is actually happening here with GameStop. All right. So this dude, Deep Effing Value, I could say fucking Deep Fucking Value, is a phenomenon on Reddit. And the reason why is because he identified correctly that there are certain stocks that are subject to what he would call predatory short selling. It's essentially naked short selling. And if you're not familiar with short selling, it's essentially betting that a stock will go lower in price. Okay. GameStop, amongst a number of other companies, have been ailing companies for some time because they just didn't keep up. They didn't innovate. The economy moved against them. There were other companies that came up and started to take market share away from them. They were failing companies. But so these hedge funds were essentially preying on these failing companies to make them fail faster or not give them the opportunity to, retool or reinvest and things like that by artificially suppressing their share price and benefiting as a result of it, and at the detriment of other investors, mostly retail investors that were invested in GameStop. Okay. Along with, a bunch of other investment funds that might be whatever, pension funds or, 401ks, et cetera, right? Well, so naked short selling, or let's start with short selling to begin with. Okay, short selling is I'm going to bet that a stock is going to go down. So what I'm going to do is I'm going to borrow. Here, I'll do it over here. I'm going to borrow the stock here. Say it's at $100, and I think it's going to go lower. I'm going to borrow the shares from someone. Then I'm going to sell those on the open market as if they were my own, and I'm going to collect cash. And then if the stock goes down, I can always cover my position by buying the stock back at the lower price. And that VIG, that net is my profit. All right. It works in reverse as well. So if I borrow the shares at 100 and the stock doesn't go down, it goes up, to 110 or 120. To cover my position, I then have to buy at the higher price. And now I've burned that amount of money. Naked short selling is going out on the market and selling that stock short without ever finding the actual shares to short. Meaning you didn't necessarily go to someone else and be like, hey, do you have shares? Because I want to short this thing. I'm going to borrow those shares. There's not even any borrowing involved. It's pure speculation. And true to, what a lot of the GameStop crew are accurate about is that it is manipulation because you're selling shares that probably don't exist. And at one point in time, the amount of shares that were sold short in GameStop were like 140% of the float. What's considered all of the shares that are out there floating around for buying and trading, more than 100% of those shares were shorted, which essentially means that 40% of the entire float was made up shares that didn't exist and had been shorted and created a supply that wasn't there that artificially suppressed the price of the stock. Okay. So that is the manipulation that Roaring Kitty, aka Deep Fucking Value, and the apes are fighting back against. Okay. And so I'm rooting for them. I want them to be able to play the game and win because it means that people that have been taking advantage of, the average Joe on the street get their comeuppance. All right. Unfortunately, this seems to be a trend nowadays with Bitcoin and this and a number of other trades that are out there. And I'm not sure it's the hallmark of very good investment, but so that's another story. So now, after the initial run-up, Roaring Kitty was questioned by the SEC, and there was all this investigation to see whether or not there was stock manipulation, et cetera, which is funny because we know there's stock manipulation happening on Wall Street, and it seems to just go by the wayside and go unnoticed. Meanwhile, one or a handful of people try to actually do the same thing that the Wall Streeters doing, and that's not allowed, right? Go read Anatomy of the State. If you haven't, it will clue you in on why that's the case. When you have a dominant force, meaning the government or the regulatory environment or the people with all the money who's sitting on Park Avenue and Wall Street, all of those people, when they create the system, they create it so that you have to abide by the rules, not them. Okay. Read Anatomy of the State if you haven't. Go over to the Mises Institute. You can download it for free. You can read it in like a couple of hours. So anyway, there was all kinds of questions and stuff. The original run-up in GameStop then finally fell back down. GameStop came back down to suppressed share levels because, again, like I said, it's not a good company, right? There's not good underlying fundamentals or anything. So now what happens is Roaring Kitty, I guess, ended up making some money or finding some additional investment money somewhere. He hasn't said anything about that. And now we have the GameStop, run up 2.0. All right. Now, in this 2.0 run up, what's different about this is he has a lot more capital behind it. Okay. Again, this is all not necessarily 100% substantiated because he posts screenshots of his P&L. Is the P&L correct or not? I have no idea. I have no way of telling, nor do I know of any news sources that could ever possibly corroborate that outside of him, showing up on a video. Now, he's supposed to go live today, so maybe he'll show his P&L live. All right. But that being said, he's come back with more money this time. And this is the way the theory goes. So he has bought a number of shares in GameStop, but he's also bought a large number of options. Okay. The equivalent of essentially 12 million shares worth of call options. And he bought them at the $20 strike price. Okay. So here's 20 right here. The stock is trading at $35.94 right now. He's in the money. Now, he bought these calls when they were already in the money. So meaning he had to pony up a lot of money for this. But once he went public with his position, it then induced a huge run up. The first run up was just him coming out of isolation. The second run up is him announcing his position, and then a lot of people piling in saying like, oh shit, he's back. Like, it's game on. It's happening this time. So what's the theory? The theory is between himself and everyone else who's on the retail side, who's trying to pile into this thing. If you buy enough calls and the calls are in the money and you have enough cash behind you to exercise the calls, meaning a lot of times an options contract can be settled without any transaction. You just get paid your profit, right? So if you have no intent of actually taking ownership of the shares, in this case, GameStop shares, if you have no intention of buying them at $20, then you don't have to pony up all of the cash that's associated with buying those shares at $20. They just give you the VIG, whatever your profit would have been if you bought today at $20 versus where the stock is trading at. Okay. So you basically just get your profit. But if you want to, you can take ownership of those shares, but you need a fuck ton of cash, right? Because remember, every options contract is 100x. It's a claim to buy or sell at a certain price on 100 shares. All right. So now every single one of these lots that he owns, he's going to have to pony up cash in order to purchase. Whether he's going to be able to raise that cash between now and when they expire on the 21st, I don't know. The theory goes that the shares that he holds, he's going to use this run up to sell, and then use that cash to then fund the actual purchase of the shares or the exercise of the options on the 21st. He can exercise up to 12 million shares worth of options. Well, that 12 million shares, if they can't be found by the short sellers, the theory goes that you're just going to have this almost infinite doom loop short squeeze that happens in GameStop. And so instead of GameStop running up to, what did it run up the last time? It hit like 300 or something last time. The last time it ran up, no, it only got up to like 120. I might be thinking about one of the other stonks, but so it ran up to 120. The theory goes this time that it won't just run up to 120. It won't just run up to 220. It could run up to 10,000 or 20,000, right? Up until all of these hedge funds run out of money by not being able to cover their position. And if the theory also goes, if he gets enough retail traders to pile in on the option side, that the same thing will happen. Now, that's assuming that those retail traders have the cash in their accounts to actually purchase the shares on the 21st. Okay. Wall Street understands this game. They understand it very well. They make a lot of money. The game is crooked. Okay. And so what I would say is I choose not to play because I know the game is leveraged against me. And to think that you're going to, beat a gambler in a rigged game is, you still probably have a very low likelihood, regardless of how intelligent or calculating you are. Okay. Especially in a scenario where they can just change the rules at any moment in time. All right. Now, is there some kind of, Pyrrhic victory or moral victory by exposing the ridiculousness? Sure. But unfortunately, I think this just goes into the pile of things that have been shown to be completely fraudulent over the last 4 years that people have been like, well, yeah, I always knew it was fraudulent. And then they just move on with their life, which is a sick indictment of where we are culturally. But so anyway, if the full intent here is to actually cause a lot of pain to these hedge funds, they kind of knew something ahead of time. And I don't think this has been contemplated by Roaring Kitty or anyone else. Okay. The CEO at GameStop literally has a legal duty to do what's best from a fiduciary standpoint for the company and for the shareholders. All right. And that has nothing to do with philosophy. It has nothing to do with morals or ethics. Okay. It has to do with what would be perceived over the long run or even in the present as what is a good custodian of that company to do. Well, when you get a huge run up in this stock like this, okay, and you're the CEO and your company is burning through cash, It's not competitive anymore. Well, you could just let this play out. But most CEOs, whenever they see something like this happen, if they're down on their luck, what they're going to do is they're going to issue shares. They're going to use the strength in the stock to try and raise cash, especially if they're cash poor and burning through cash, to try and keep the operation going. Okay. Now, there's another angle to this where, yeah, if Wall Street is unfairly suppressing the stock price, then they're also eliminating the company's ability to do this. Okay. But what doesn't register here for me is if all of these calls that are being purchased specifically with the strike, with the expiration date of the 21st, okay, even if like the primary or the secondary goal of this is to get GameStop more cash so they can retool, find a better business model, buy another asset that's going to be, improve their cash flow and, secure them, stop them from going bankrupt, because most of these companies are destined for bankruptcy. AMC, Bed Bath & Beyond already went bankrupt, right? So if at least the primary or the secondary goal is to get them cash, I can't see how cash right now moves the needle by the 21st. I just can't. I can't see an acquisition happening. I can't see a huge, a revitalization plan, right, getting enacted and started or even developed by the 21st. Okay. In essence, a lot of this money that's being pushed into the stock via kind of the retail traders, I would imagine sub hedge funds are having to cover shorts in order to, window dress their positions. A lot of this cash that's being dumped into the stock price, and then subsequently the company is issuing shares. And here, if I stop the share screen on the chart, and if I show you, like, this is what Wall Street knew was going to happen. Okay, hold on, that's the wrong one. I have to show that one next. But this is what Wall Street knew was going to happen. It was almost guaranteed. Where the heck did I put this news article? I'm losing it, people. I'm losing it. All right, we're just going to go with that share screen for now. All right, so what happens is the CEO, because essentially there's like a fiduciary duty, issues earnings early. Okay, earnings weren't supposed to come out till next week. Issues earnings early. And the reason why he had to issue the earnings early is because you can't make a material change to the operations and things like that without issuing the earnings and signaling that to investors. So they issue earnings early, unscheduled, and then they issue 75 million new shares into the marketplace. So again, if the theory goes that all of these call contracts, call options are to be exercised, and when they're exercised, the hedge funds are going to have problems sourcing these shares, I think this just completely destroyed that angle. And quite frankly, between now and the 21st, I mean, like, I don't think that 75 million shares are going to get soaked up by the people you want the shares to be soaked up by in order to source them or in order to continue to put the pressure on these hedge funds that supposedly won't be able to find the shares. Now, look at this. Shares outstanding, okay, are basically 351 million. All right, so that has to do with like kind of the earnings per share. So when earnings come out, you divide by 351 million, all right? What's really important here is because we're talking about whether or not the shares are going to be able to be sourced, there's a difference between the total shares and the shares that are out there in the float, meaning the shares that are actually out circulating the economy. 351 million shares total outstanding, but the float is only 272. So there's basically 80 million sitting in GameStop's, I forget the exact term, but like essentially in their treasury, right? Like they hold those in reserve. So those shares aren't out floating around. They're essentially owned by the company, okay? Or insiders within the company. So there's 272 million shares out there floating around. The call contracts from Roaring Kitty only amount to about 12 million shares, which is, 1/20th, even high. Like it's basically less than 5% of the total float that's out there. On top of that, they just increased the number of shares floating around there in the marketplace by essentially 25%. So they've added another 25% to the total shares. Now, also here, that's mixed in is, and again, take this for what you will. A lot of times these numbers are doctored, but the total float that's short here is only recorded at about 68 to 69 million, which is again, 1/4 to 1/5 of the total float. It's not the 140% that's been reported before. Now, again, based off of the call and short, like the put contract volumes, that could be completely different in terms of the way the options market is leveraged one way or the other. The actual shares that have been borrowed and shorted is basically 20 to 25% of the overall float that's out there, right? So Wall Street knew this was going to happen. They knew that even if the price goes up, that there was going to be a liquidation event because the CEO is essentially required to. If he doesn't, and the company still goes out of business despite the fact that the stock price goes up, that means that the shareholders, both the retail and the institutional shareholders, can sue him, and they can sue the company for whatever cash is left or not left. Okay, so not to mention the fact that it's a big club and you ain't in it. Okay, but he is. And so if he wants another job after GameStop goes out of business, you better believe he'd better be able to show you a track record of doing the things that CEOs would typically do in this position. And so now we have 75 million additional GameStop shares out there circulating. So where's the win here? Where does the win now settle? I mean, yeah, GameStop just raised a ton of cash. Are they going to be able to go out there and buy, some kind of streaming service or, I don't know, a NFT based web gaming company? Like, I don't know what the play is here, guys. Given a long period of time or a longer runway, maybe they're able to make a horse race out of this. But by the 21st, I mean, quite frankly, I would be highly surprised here if this share price doesn't end up settling. And this is the manipulation that's allowed in the marketplace. In fact, it's expected. Okay. With all of those shares outstanding that Roaring Kitty has at a $20 strike price, meaning they're in the money above $20, I would be highly surprised if GameStop stock doesn't close out on the 21st pretty close to $20 a share, which would be, a $12 drop from here, which would be roughly another 33% drop from here, which would also mean that Roaring Kitty's options contracts would, drawing close to the 21st, if they're near $20, those option contracts essentially amount to zero. And all of that money essentially just gets burned. And a lot of it ends up in Wall Street's pockets. Something else that also doesn't get talked about here is Wall Street has a lot more money than you do. They have a fuck ton more money than you do. In fact, they use your money to make money without any risk of loss. Okay? And this is actually a really good example of this because they can go back and they can retranche. They can borrow money from places you can't borrow from. They can trade in dark pools where transactions happen and they don't get reported to you in terms of the size of them or the pricing or the timing. Okay. They have all kinds of ways in which they can manipulate this game. What you see that gets presented to you is like just the tip of the iceberg. What actually happens below the water, you don't get to see that, right? You only get to see it if you're on the inside. And when you're on the inside, right, you'd better keep your mouth shut and not tell everyone about what's happening on the inside, because then you miss out on all of the millions and billions that you can earn from being part of that crew. Okay. Well, that's what I see. I hope I'm wrong. I hope these fuckers lose their shirt. But I've been involved in this end of the market for long enough to know that when these things happen, any victories on the part of the non-Wall Streeters are short-lived, and they are small compared to the victories that the Wall Street elites are able to leverage, their position to gain that leverage to then make their victories bigger and more long-lasting. Okay. Is it a wake-up call? Yeah, I think it was a wake-up call the first time it happened, right? It was a wake-up call to me because I wouldn't be here talking to you about my investment channel that doesn't focus that much on stocks. I talk about stocks, but I don't advocate people put money into stocks because shit like this happens. It's all fugazi, right? You think Nvidia's worth the trillions that they say it's worth? No, it's all bullshit, right? It's literally fake. It's like it's a mirage, okay? But it took things like this for me to understand that. It also took things like this for me to then ask, okay, well, where do I go? Where else do I put my money that's not leveraged against me like this? Okay. Or at least in the games that I know are leveraged against me, how can I benefit from them without putting too much at risk? And also without making other people ridiculous amounts of money. Okay. Like that's the other angle here. How do I do this? And unfortunately, I'm worried that this GameStop story ends with some rich people who really don't need more money are going to get a lot more money. I'm again, knock on wood. I hope I'm wrong. Okay. But that's really that's the nuts of it. That's the down and dirty. I wish I had better news for you. And you can light me up in the comments. If you're an ape and you think I don't know what the fuck I'm talking about, go ahead, light me up in the comments. I want to be proven wrong. I'm telling you that right now. I want to be proven wrong. But that's just what I see. I've seen this happen time and time and time again, where someone thinks that they have it nailed, right? And you got to remember that when you listen to some of these stories that do come out of Wall Street, like, the hedge funds that bucked the trend and made billions of dollars, like the Big Short and stuff like that. In a lot of cases, the reason why they were able to do that was because their moves were so absolutely ridiculously insane. And for the most part, they didn't really advertise what they were doing, right? They weren't out there taking out an ad or going on social media. This is the other dynamic that works out on Wall Street. Sharks gang up on other sharks when they find out that they're weak. They are cannibals. Okay. So the hedge funds, the two hedge funds that blew up the first time the GameStop thing happened, they blew up partly because of the retail side of the trade. But the vast majority of the damage was done by the other hedge funds that were out there that smelled blood in the water. And they went to go steal the money of the two hedge funds that basically didn't risk manage themselves well. And they got in trouble. And they didn't have friends with deep enough pockets to float them for long enough for them to then make up on those losses. Okay. Well, the same thing's going to happen here, except this time when you're advertising your position, when Wall Street sees that some rando on Reddit and with a YouTube channel, okay, has $200 million at risk in the market, the first question they're going to ask themselves is, how do I get that 200 million? Right? And then when they know that a lot of other people are piling in after that person, then they really start to salivate. Okay? Because then they know that there's money to be made. And by made, I mean stolen. All right? Please keep that in mind. Not to mention the fact that I think people are taking the same slant here as they've taken with Bitcoin. It's like all in because they think, one, it's a sure thing. It's going to happen. Got to believe, right? Two, they're being told, hold no matter what. Don't worry about the fundamentals. Don't worry about the actual numbers behind things. It's all fake. It's all going down, and you're going to be able to make millions, or in this case with Warren Kitty, $1 billion. Okay, that's the story that's being told. This thing is going to bounce all over the place over the next couple of weeks. I'm telling you, I would be highly surprised if this thing doesn't settle near $20 a share come the 21st. Just my 2 cents. Could I be completely wrong? Yes. If you have money at risk in this thing, please God, do not make it, like your net worth. Please don't make it like huge chunks of your investment portfolio. If you're going to play in this thing, like treat it for what it is. It's a lottery ticket. If it pays off, it's supposed to pay off huge. That's great. That's not what prudent investors put all of their money in, because something that's going to pay off huge typically is also a very low likelihood of happening. And so they don't put a lot of their money into those things. They put a little bit of money so that when it pays off huge, they didn't have to risk that much. And they got a huge reward off of it, right? But they're not sitting there leveraging their entire bankroll on, some kind of outsized risk that, if you're rational and you're actually practicing good risk management, you're looking at the potential return, but also you're looking at the probability that you actually get to that potential return. And if it's low, but the potential return is huge, then you put a little bit of money toward it. If you want to play in that game, you do not over-index towards that position. All right, I'm going to get down off my soapbox on that one. Let's do a quick workaround of the stock market. I've talked about this thing for 30 minutes, okay? Let's look at the charts really quickly. It's Friday. Crazy shit happens. Options expiration. Tons of market manipulation happen on Friday, especially during Options X. So take a lot of this stuff with a grain of salt, okay? The stock market today, the casino is up a little bit today. We got jobs numbers earlier. In fact, let me pull down the chart and put back up the jobs numbers. The jobs number, this is the other thing. This shit is so fugazi, okay? Here's the jobs numbers story from Reuters. This is on Yahoo Finance. Fed seen waiting to cut rates as job growth picks up. Oh, fantastic. The economy's great. It's good. It's fantastic. Is it really that great, folks? Tell me in the comments. Do you find the economy is working for you? Sorry for laughing, because you're probably hurting like everyone else is, because you're not a Wall Streeter that makes freaking $1 million a year. Okay. Out of the article, a U.S. job market scorecard that exceeded all forecasts has undercut confidence over when or even if the Federal Reserve will begin easing policy this year, putting the focus for the policy outlook on next week's Fed meeting and Fed Chair Jerome Powell's own guidance. By the way, the moment this jobs number hit, the quotes out of all the Wall Street firms are completely contrary to the direction the casino's moving right now. They all said that the Federal Reserve was going to look at this, and they were going to actually look at not the number of jobs that was created, because, again, this number is based off of a mathematical model. It's all rounding, seasonal adjustments, and birth-death index bullshit, okay? When they say we created 272,000 jobs, but the unemployment rate went up to 4%, okay? Does that really, what makes more sense to you? Being an actual person, not an NPC, an actual person in this economy, what makes more sense? That there were a ton of jobs created, or that the unemployment rate went up? I think it makes more sense that the unemployment rate went up. And that's probably a better indicator of what's happening in the employment sector, or like in the employment world, okay? Not to mention the fact that if I pull this down and I look at Zero Hedge Zero Hedge is all over this stuff. If you don't follow Zero Hedge, definitely check out Zero Hedge on Twitter, on X. And this stuff comes out like almost immediately, okay? Look at this. This is the post out of Zero Hedge. In the past year, 1.2 million full-time jobs have been lost and replaced by 1.5 million part-time jobs. Okay? Is that like a great economy where everyone works part-time now? They can't make up the stagger on pricing, and we're losing full-time jobs? Is that like a booming is that a booming economy? No, I don't think so. It's completely fugazi. All right, one other data point, I'll call it. And this is controversial. So take it for what it is. I'm not passing judgment on this. This is not a political conversation. All right? Actually, before I even look at this, the jobs that are being created are being filled by people who are not born here in the United States. Okay. So most of the jobs, in fact, since 2018, the figure goes that almost no jobs have been created. Some have been regained by people that are like Native Americans, not Native Americans, like, indigenous peoples. Okay. Like US born peoples. Since 2018, jobs haven't been created for them. They lost them and then regained them after 2020. But it's basically flat from 2018. Meanwhile, there's a huge gap because people that are non-US born have gained like all of the jobs over that time period. And so all of the job gains from the last give it 5-6 years are all undocumented people or foreign nationals working in the United States. What does that tell you? It tells you that whether it's a conspiracy or not, there's a trend toward hiring people that you can pay under the table. You don't have to pay taxes on. You pay them a lower wage to try and keep the party going, right? You try and keep corporate profits at where they are. And the way that you do that is by paying people less than you would have to pay, people that were born in the United States, right? Take that for what it is. It's a data point. I'm not telling you I know for certain that that's like exactly the mentality that's happening here, or that there's some kind of like, shadowy figure pulling the strings on this. But the numbers are the numbers, okay? Let's go back to this other chart that I jumped the gun on. Look at this difference. This is the difference between the establishment survey and the household survey, okay? If you don't know the difference, the establishment survey is that fugazi number that they just make shit up in, okay? It's all projections and mathematical models, and this is the net birth death. And they actually had the gall to say when they released the numbers today that all of the job creation was because of new businesses forming. And they didn't base it off of like, filings for business certificates to operate in certain states. They just based it off of, well, there were so many births and so many deaths like way back when, so we estimate that those people must have created businesses. That's the number. All right. The gap between that and the household survey, which is the survey where they actually dial people up and go, hey, did you gain or lose a job? Or they actually call up and they call a hiring manager to go, hey, are you adding or keeping the same or removing payroll? Okay. That's the difference is huge and growing. What does that tell you? It tells you that their numbers, their projections are bull, complete bull. This is not an economy that is actually what people are telling you it is. Now, why would the casino be going higher on jobs numbers that were hotter than expected? It's because even the casino knows that these are bull, and it knows the casino knows that they want their rate cuts, and seeing the unemployment rate go higher gets them closer to their rate cuts. They want their cocaine. They want the cocaine. All right. Up and to the right, up and to the right, up and to the right. That's what they want. This means we're closer to getting it. A lot of the investment houses say, okay, well, originally we were estimating July. Now it's going to be September. I don't think so. I think this next FOMC meeting, you're going to get some kind of telegraph from the Federal Reserve that they're cutting sooner rather than later. Could it be in September? Sure. But that basically means that the market is going to rally for the next 3 months in anticipation of the rate cuts. But I already told you, the Fed's behind. They're always behind. Okay. But they're behind because Canada cut and Europe cut, and they're behind, which means the United States is behind, and they're going to fall further behind. The other reason why they're going to be pressured to cut, look at the dollar. The dollar caught a huge bid today. And it's because relative to the other currencies are racing to the bottom by cutting rates. They have weak economies because that's the only reason why you cut rates. And the dollar's strengthening against those other fiat currencies that are out there. The Federal Reserve can't have this. This is disinflationary, okay? Or it could become deflationary, which is what I anticipate it will become if the Federal Reserve waits too long to turn the money machine back on. And they can't allow that. What they feel now, they've been telling everyone all along, well, the risk is, allowing inflation to reignite. We're actually not that afraid of deflation, is what they've essentially been saying, what Jerome Powell's been saying. That's bull. They are deathly afraid of deflation because in a world that's just itching to de-dollarize, deflation is the reason why they would de-dollarize. Because most of these countries that are reliant on exporting to the United States, they don't want the US dollar appreciating dramatically against their currency. They just don't, because they need controlled demolition the same way the United States needs controlled demolition. You can't have huge imbalances one way or the other. And so they'll keep up with the Joneses. They will cut rates like good little soldiers. That's what's going to happen. All right, in commodity land, we got a little bit of weakness in crude. Actually, crude's kind of like flat here after the big gain the last 2 days. We'll continue to see how this works. Again, if we get rate cuts, crude's going up, it will kill the consumer. What little life is left in the consumer, if crude goes higher because of rate cuts, the consumer's done, toast. Lumber's actually holding its own today. Got destroyed, came back the last 2 days, and now it's just kind of holding in. Again, today is options expiration day. You want to talk about manipulation? Look at this. This is gold. This is silver. All right. These trades aren't over, by the way, folks. Just because you get these big moves down, these trades are not over. In fact, when you get to market tops, you get huge back and forth trades that happen. Okay. What the gold and silver market, what they're trying to sell you on is the fact that the Federal Reserve isn't cutting rates anytime soon. Okay. Don't believe it. Not to mention the fact that if you are like a long-term stacker, this doesn't even matter. In fact, I'm probably going to run out tomorrow and buy more silver as a result of this, because this is a price discount. I told you, $29. Here's my yellow line. Any kind of weakness in silver, I would expect there to be buying support at 29. In fact, I saw someone else today that had an argument where it was like more like 28.30 or something like that. I think the spot price here at $29. That's what I'm targeting. I think that's where you end up seeing the buyers come back in. And you're going to see this thing move higher, especially if the Federal Reserve telegraphs that they're cutting rates. That's really it that I'm looking at in commodity land. Let's finish up really quickly. We'll go look at fixed income. HYG, man. Look at this. Pulled back. All right. If the Fed doesn't cut rates, this is high yield corporate debt. This is junk bonds. Okay. If the Fed doesn't cut rates, we already know that we're careening towards huge numbers of bankruptcies. But the longer it takes, the more the damage is. And so in this environment, if all of a sudden there actually is some possibility that the Fed pushes back rate cuts, you're going to see some really, really bad stuff happen here, because this is companies that are dependent on borrowing just to stay in business. Kind of like AMC, except for the fact that, AMC and GameStop, except for the fact that AMC and GameStop have already been junk bond status for a long time. They couldn't continue to borrow. So this GameStop push has been like a boon to them to keep their doors open. Treasuries are up in terms of yield, meaning people are selling them. Big money is selling them. And the reason why they're selling them is, again, there's this split in the market where it's like, okay, the people that are buying the indexes, they think that there's going to be a rate cut because of the 4% on the unemployment. The people that are in the U.S. Treasury market are basically selling these treasuries. One, because this drop in the yield means that if you started buying U.S. Treasuries here, they rose in value as this yield dropped. You made some profit. You're cashing in on that profit right now. This is a huge move on the 2-year. If you look at the 10-year, this is a huge move on the 10-year. If you were buying treasuries right here and the price continued to go up, because remember, it goes reverse from the yield, you made a ton of money. You're locking in that profit right now because it's Friday, you're up. There's some employment numbers that are a little weird. Like, are they good? Are they bad? We don't know. Take profit. That's what they do. Okay? That's what's happening in U.S. Treasuries right now. Does this mean that the downward trend is over? No, not by a long shot. I fully expect rates to continue to trend lower because they have to. The Fed has to cut. They are painted into a corner now. All right, really quickly, finishing up with crypto. Bitcoin's up a little bit today. It looked like it was going to realize this breakout. Like, we are on the verge right here of this inverted head and shoulders breaking out. The only thing that's like left to happen is a Fed rate cut. As soon as that happens, Bitcoin's going to be able to break out and move higher. Okay, regardless of the reasoning why you think it is, whether it's because inflation and you think Bitcoin is a inflation hedge, which it isn't, by the way, not right now, or if you think that Bitcoin is a technology stock, the way I think so, lower rates means good things for technology stocks and speculative investments. As soon as the Fed cuts rates, this thing's going to the moon. Okay, it might be a quick ride, might moon and then come right back down, but it's going up. All right, Ethereum continues just to trade sideways. It's red today, but again, it's trading sideways. It's consolidating. It's just waiting for the next move higher, which is probably the approval of the ETF. It's why I actually have been buying more Ethereum each month now than Bitcoin. And big point here, I'm a value average kind of guy. I think that Ethereum has much higher upside here because of the ETF news, at least over the short to medium term. So that's why I'm value averaging heavier into Ethereum. All right. But that doesn't mean that Bitcoin's not going to rise. It doesn't mean that, Ethereum's going to fall off like a big deal or a little bit or move up, tomorrow. It doesn't mean that. It just means that I perceive that the value proposition is better here buying Ethereum than it is Bitcoin, but it doesn't mean that I'm not value averaging into both at the same time. I told you yesterday, Bitcoin Cash looks poised for a big move. Make this known. If Bitcoin makes a move higher, Bitcoin Cash is going to follow it. I actually think there's a huge opportunity here for Bitcoin Cash if you're a Bitcoin Cash investor or buyer or hodler. All right. What else am I looking at? Everything else looks like there's a lot of red on the screen. Like it's mixed everywhere else with the exception of Bitcoin. Bitcoin's actually up just a little bit. The total crypto market cap is down today, but again, hasn't really moved anywhere. And a lot of that is because Ethereum is weak today. So, big moves other places aren't really there, not anywhere that you would pay too much attention to. So, I mean, overall, crypto is kind of in a holding pattern. We'll see what happens over the weekend. It's the benefit of crypto being, a 365, 24/7 market. But yeah, that's all I got. So happy Friday. I'm glad you made it here with me. I appreciate all your time and energy and taking part in this. Help me out with the algo. Give me a thumbs up, thumbs down. No, not a thumbs down. Thumbs up or a follow, a subscribe, hit the notification bell. A reminder, if you made it this far, I am giving away silver, actual money. Sub to the Anarchist Investor, anarchistinvestor.substack.com. To get in on that, July 1st, I'm giving away 5 ounces of silver. You have to be either a free or a paid subscriber over at anarchistinvestor.substack.com to get in on the giveaway. And that's all I got. Everyone, have an absolutely fantastic weekend. I will see you back here live Monday at noon Eastern. And yeah, I appreciate you. Peace.
Stuck in a system that just ain't right.